Okay, good afternoon, one and all. Good afternoon. Just checking to make sure everything is looking good. Maybe you can confirm if you're hearing me okay. Got a new microphone set up today. Right, hello, Harry FX. Good to see you in the house. Ranga is in the house. Rayan Ha, hello to you. Welcome. Welcome to this weekly live stream. It is a bank holiday here in the UK today, so I'm not expecting many UK residents on the stream, but nonetheless, we are a global company, so hopefully we'll have a few of you here. Yes, I am the host. Yes, hello, Ola. Hello to you. So welcome to the weekly live stream. We do this every week, unless I'm out of the country, of course. We do this every week. Basically, we'll have a look at the main sort of market movers from last week. Then we'll have a look at what's on the docket, what's on the calendar for this week, what we can expect. Then we'll have a jump on to the charts, and we'll look at some potential trade opportunities. And also we give away some assessment accounts in our pot firm. We do this every week. We're basically giving away 2 times $12,500 assessment accounts absolutely free. Okay, and basically all you need to do is guess the price of gold for this Friday's close. So you basically got it's purely a guess, isn't it? You've got views and what have you, but you've got to get the nearest two that get the close of the price of gold on Friday, as per the Oanda CFD screen, wins those. So that's something that we do every week, absolutely free to attend. On that note, we did have one running from last week, and gold closed at 3358. 3358 was the close. And we have 2 winners. Hi, Vivek. Oh, good to see you again, Vivek. I think I've spoken to you a few times in the past, haven't I? So this week's winners of the 2 times 12,500 accounts. This week's winner is going to be, hello, Ola. This week's winner is going to be Omog Bolahan from Nigeria. Apologies if I've mispronounced your name there. And Fabiano Luis from Portugal. So there you are. We do have a Portugal winner, Ola. Shame it's not you, but there you are. So if one of those names is you, you'll be getting an email from us shortly, and basically giving you instructions on how you can avail your free 12,500 assessment account. So we've opened up this week already. So what you need to do is by the end, oops, Daisy, where we are. So basically by Friday the 30th, this Friday coming at 6 o'clock, basically EST, Eastern Standard Time, Eastern Daylight Time. Guess the price of gold as per the Oanda screen. I'll show you the Oanda screen in a moment. Your chance to win the free evaluation. We've dropped already the form that you have to fill in. Make sure you give in your email address, your correct email address, no fake email addresses. Obviously, if you put in your fake email address, well, you won't get notified when you win, and you need to have a notification with instructions on how to avail that. So basically, you got until 1:50 today. I'm not sure if the stream will last until 1:50 today, but the coupon is open. The competition is open to 1:50. So your chance to get your selections in. Lonely Girl says that prices of gold will close negative. Do you mean lower than where we are at the moment? It says the link is not working. Let's have a look. Link not working. We'll check in that. So just keep an eye. We'll obviously post the correct link if that indeed is not working in a moment. Clive Harrison says, I see you have shades on in the front page. Have you been out in the BM with the roof down? Bring back the good old days of the 1990s. Yes, indeed. I haven't been out this season. It's all been ready to go. I get it serviced every year just to make sure that it's in good form and what have you. But I haven't been out yet in my vintage BMW, which, oddly enough, I actually got someone knock on my door a couple of days ago. I didn't answer it. I saw him on the ring, and then he dropped something in the letterbox, basically wanting to buy it. So that's a bit concerning, isn't it? People looking at it and wanting that. But yeah, there you go. So there is the link. We've just dropped a new link in to the chat. Use that link, get your entries in, and we'll keep this open, as I say, until 1:50 today. For those of you not in the UK time zone, that's basically about 45 minutes from now. Absolutely free to attend. Okay, so as I said, we are going to be just looking at the sort of fundamentals and what's been driving the markets. Then we'll look at the charts. But I do have to put this disclaimer up. Unfortunately, it's something that we have to do. This next 45 minutes or so is purely meant for entertainment, education purposes only. Do not consider it to be investment advice, and do not trade the biases that I say. If I'm telling you we've got potential trade ideas, that's just a potential trade idea. If anyone's been trading for any period of time, you will know that no one has the authority on trade ideas. We have winners, we have losers. If you're just picking the odd trade that I call, you've got just as much chance of picking a loser as you have of picking a winner. Trading is all about having an edge, and that edge plays out over time, over a large sample of trades, not just one trade. I do have a couple of sort of strategies that I know I follow. We call them the boomerangs. We'll talk about some boomerang setups as well. But unless you know how to trade the boomerangs, then, of course, you'll be foolish just to copy them blindly. So with that all said and done, another winner from Portugal. With all that said and done, let's have a look then at the main drivers from last week. It was actually quite a quiet week. I think last week we did call gold up. Gold was up about 5%, and it was definitely and the S&Ps were hit. S&P, the stock markets were hit. There seems to be a money sort of outflow of the US markets, pretty much down to the continuing sort of uncertainty with trade and tariffs from the Trump administration. Also, there was a tax bill signed, which is basically putting a heavy burden on the deficit in the US, the trade, the budget deficit and the trade deficit, and that is basically seeing some risk. Well, we're seeing some risk off last week in the stocks. NASDAQ was down about 2.5% as well. S&P, the Dow was all down. The dollar itself was down about 1.75%. Dollars hitting lows across multiple currencies at the moment as money flows out of the US. I still think that is the theme that we play into this week. That's certainly the theme that I'll be looking at until I see signs on the charts of a dollar reversal. Not seeing it at the moment. Still liking to trade that down. Got to pick your currencies against it, of course. We'll talk about that in a second. Bitcoin, I can almost say Bitcoin didn't do very much last week, up 2.5%. The FTSE was up 1.5%. FTSE, we had some good retail sales numbers out of the UK showing a growth of, I think it was 1.2%. Also seeing sort of inflation up there at 3.5%. But there was a flight certainly into the US, into the UK stock market. And obviously with the trade deal with the Eurozone, a trade deal with India, a trade deal with the US, stocks in the UK seem more favorable at the moment than the other stocks around. Although the DAX, the German stock market, has had a reprieve this morning. But certainly with Trump again, Trump seems to be sort of the controlling everything these days in terms of the markets. He basically rolled back the tariffs that he had penciled in to impose on the Eurozone, which was supposed to be 50% tariffs. He's now rolled that back to the 9th of July, if I'm not mistaken. So DAX, UK FTSE, all seem to be doing quite well. And indeed, the UK US stock markets are showing a bit of a risk on mood as well. When I talk about risk on, it basically means money is going into risk assets. If you don't have confidence in the economy, if you don't have confidence to invest and you want to sit on your money under your pillow or under your mattress, that's risk off. If you want to take a bit of a risk for potential better return, then you put money into risk assets, of which the stock markets are deemed to be the biggest risk assets. That's basically what we mean when we say risk on and risk off. As you may or may not know, if you've been following me for a while, risk on, risk off also affects the currencies as well. There's certain currencies that do better in risk on and certain currencies that do worse in risk on, namely the commodity currencies. And that's exactly what we're seeing at the moment. Pretty much a risk on environment, seeing the Australian dollar, Canadian dollar, Kiwi dollar, all doing quite well. WTI was unchanged last week, although I did see that WTI, that's basically oil, West Texan oil, Western Texan inventories, or whatever it's called. That was pretty much unchanged from last week, although oil is taking a bit of a push higher as we speak, again, because of the risk on theme that we are seeing with the rollback of Trump again. Devan Nash, hello, how are you? I'm very well, thank you for asking. Machuda, good to see you. 3351 is gold price at the end of the week. Pranav, if you want to enter the competition, you need to do it on the form above here in the chat. Hi, Jigger. Yeah, you need to do it in the form above here on the chat. You can't just put it in this in the chat here because it won't get counted. So you need to put it in fill in the form, and then it will be included. 3351 is what you're calling, is it? Okay, well, we'll have a look at that. Let's have a look. What is gold at the moment? Gold at the moment, and this is the so this is Oanda. So if you go up to the top here and you see the Oanda, it's basically this Oanda one here. We're not affiliated in any way to Oanda, by the way. It's just happened to be the top of my list, which is why I use it. So we're not affiliated in any way, shape, or form, but that's the one that we are using. So gold. I mean, what do I think about gold? Well, don't let me influence your pick. But I think gold has a challenge for this double top. I think this double top is significant. I mean, but interesting when you see this type of pullback into a natural level where you'd expect liquidity to be, and then you put in this sort of low wicked candle. This was like a week and a half ago. Low wicked candle. That shows you that this area, which did initially have a pullback from about 5%, and then you had this big. You see these three big green candles, well, 4 or 5 big momentum candles. It's very difficult to tell what the institutions are doing, but when you see that type of action, these big, almost no wicked candles, this is showing you that institutions are taking this higher. Okay, now when institutions buy or sell, they generally don't put all the orders in at once. They do, they sort of feed them in. It's called splitting. That often means that when the markets get back down to those levels, you can quite often see, those orders still sitting in there. I was telling someone the other day, I used to work for UK investment bank many years ago. And I was working for a market maker. So basically we were, basically taking on, the risk buying and selling gilts, UK government bonds. And often, if we were sitting there and, we made a market and maybe Commercial Union phoned up or one of the insurance companies phoned up and they sold us, say, 50 million, government bonds, we then have an exposure. We've got to take that we make in the markets. We had that risk we're now holding because Commercial Union or Prudential or whoever it was whacked us for 50 million pounds worth of stock. We would have exposure. So we wanted obviously not to have too much exposure unless we had a really strong view. So we would hedge that position in the futures market. So that basically meant we have this lot of the stock means we'd have to sell some futures to get our books back to where we were, not particularly at extreme risk. But we weren't going to put in 5,000 contracts into the futures market at any one go. We drip feed those markets, those futures into the markets. That's basically what we were doing. So we don't want to move the gilt market by 2 or 3% because we're holding all these gilts that we've just bought. So we drip feed. We used to sell them and release the orders slowly. That's basically, and I was obviously an institutional investor. So that's basically what institutions will do. And this is exactly what I think has happened here. Gold investment banks, central banks are buying gold. They have been buying gold, and I think there's more orders to be bought when it comes down here. Personally, my view is that we are seeing continuation of gold strength. Dollar is under pressure. Dollar is actually under quite a lot of pressure. And when you're seeing dollar under such pressure, that can only really be good for gold, because obviously if dollar is getting cheaper, it means you can buy more dollars, and then with that you can buy gold. So basically gold becomes cheaper because the dollar becomes weaker because it's priced in US dollars. So I would expect to see gold have another test up here. So for me, I am thinking we're going to drop in at I'm going to go my personal guess is 3415. I can't obviously win I obviously can't win an assessment account because I am part of the team here. But that is where I am going for 3415. Do not do what I've just done for the sake of it. Madness. Hope you win today. I hope you win as well. Good luck to you. Well, you've got to take part. If you don't take part, XTN, then obviously don't buy a ticket. Can't win a raffle. If the market moves 5,000 pips on US 30, how much of those pips FTP gives you? I don't understand the question, Jonathan. If it gives me, I don't understand the question, Jonathan. You might want to rephrase that. If you want to rephrase it, I'll try again. Yeah, I don't understand the question unless you're, or I don't understand the question or the premise of the question. But yeah, by all means, have another go at that. Gold to the moon, 3415. Hang on, pin the market. You've just pulled my exact level. That's what I'm calling. Gold to the moon, 3415. Well, remember, we are giving away 2 prizes. It's the closest, nearest the pin gets it. Right, okay, so let's have a quick look then at the main fundamental drivers for this week. Not a huge amount going on, but nonetheless, it's worth talking about. And even if you don't trade the fundamentals, I think it's really important that you are aware of what the fundamentals are doing in the markets that we're trading. And when you get the fundamentals agreeing with your technicals, that might give you reason to, to grade your trades higher. Now, I always say to my students, it's good to grade your trades: grade A, grade B, and grade C trades. Grade A trades you take all day long. Grade B trades you take with lesser risk. And quite frankly, grade C trades you shouldn't be trading at all, quite in my opinion. But there you go. But if the fundamentals align with the technicals, it becomes an A grade. So you might want to risk 0.2 more than you would risk on another trade. And at the moment, obviously the fundamentals are for dollar weakness. That's basically what's happening. Dollar weakness is basically coming from the fundamentals. Okay, as I say, today's a bank holiday in the UK. Not very much going on. Obviously, it's only a bank holiday in the UK. We have got, ECB President Lagarde is speaking this afternoon. I haven't got it here, but she's speaking in about 2 hours' time. I don't know if she's going to start mentioning the trade tariff extension from Trump. But Lagarde is the ECB president. Remember, the ECB decide on interest rates in Europe, and you might get clues from her as to the timing of the future cuts. We've got some inflation data out this week in Germany as well. I think, if anything, my bias for her would be that she's going to be siding on the more negative side, dovish side of interest rates, i.e., interest rates being cut sooner rather than later. Now that inflation is pretty much under control in the Eurozone, but we'll see. Let's have a look here before I get into it, because I want to make this inclusive. Gold supply is increasing as more countries discover it as well. Other third world countries taking control over mines and licenses. Interesting times ahead. 3281. Okay, good. Yep. Yeah. Well, gold's been mined forever. Obviously, cost of mining, is a factor. But yeah, it's not like Bitcoin, which has a finite supply. This does not have a finite supply, but of course, mining costs are a factor. And if the dollar is getting weaker, then that doesn't mean that mining costs become cheaper, because most of economies are priced in dollars. So that might be another reason. Might be another reason why gold trades higher. Right. Okay. So what have we got? Tuesday, 27th of May. That is tomorrow. So we got Japan CPI coming in at 2.3% expected. That is, of course, and that's down up from 2.2%. The rest of the developed world, as you know, have problems with inflation being too high. Japan has problems with inflation being too low. Any economy, inflation is not a bad word. Economies need inflation. Otherwise people just sit on their hands and do nothing, don't spend because it's going to be cheaper tomorrow. So inflation is good for an economy, but 2% is deemed to be good for an economy. Anything below 2% is not deemed to be good, and anything above 2% is not deemed to be good. So Japan are trying to keep their inflation, get their inflation and prices moving. That helps growth, it helps wages, it helps the economy, and if indeed they do start seeing inflation push up, then you're more likely to see rates go higher in Japan. So we do keep an eye on that at the moment. Inflation certainly has been ticking up in Japan more recently, and of course, we're seeing a bit of follow through into the Japanese yen on the back of that. Look at dollar yen in a moment. It's one of my charts I want to look at. And 130, we've got durable goods in the US now. This is I don't know if this is an important number. The economists don't flag it as an important number. It's coming in at 7.9, down 7.9%. Now, this has got to be tariff related. As far as I'm concerned. I'm not an economist. I don't really know. But durable goods are things like, the big ticket items like your washing machines and your tumble dryers and your fridge freezers and what have you. That you normally only buy if you're confident about the economy and you're confident about your job and you're confident about, you don't necessarily take these big sort of high ticket items which you might ordinarily hold for 4 or 5 years unless you're confident, and that shows me that there's a bit of nervousness in the markets. Retail durable goods down 7.9%. It's all down. That's a big move. That basically means people are not spending money. They don't have confidence. And I'm not surprised, really, if you consider the Trump tariffs and uncertainty there. Grading says, "Yeah, this is good, Jigger. Yeah, that's good. I agree. I think that's a good. When everything's perfect, grading trades is good. And also when you analyze your trades at the end of the month, as you all should do." And I know most people don't, and they should, but I know most people don't. That's why most people are failing, because they lose on their trades and they don't actually do anything about it, they just revenge trade and what have you. But if you're treating this seriously and you want to be sort of a full-time trader, you do analyze your trades. And if you start to realize that all your grade C trades, your grade B trades are the ones that are costing you, well, the writing's on the wall there to not be trading your grade B and your grade C trades. It's no clearer indication of what you're doing, quite frankly. So I think it is important to grade your trades. So there you are. Right, Wednesday we've got Australian CPI coming in. It's important. Oh no, we've had a rate move in Australia already. We've got one in. We've got New Zealand. Australia, we've got a bit of data out this week in Australia. It's a strong currency at the moment. It's a risk-on currency. Remember, it's a commodity currency. Risk on stocks are higher. Risk on currencies tend to do better. We've got consumer price index dropping in at 2.3 maybe this week, from 2.4. We've also got a rate statement out of New Zealand. Swap markets are stock markets are pricing in a 25 basis point cut, and that's basically where we are expected to see. So we're expected to see rates in New Zealand drop from 3.5% to 3.25%. That's pretty much priced into the market. So if you're trading that overnight, 3 a.m., this is UK time, of course, so you have to work it out from where you are in the world. UK time, we're coming up to 1:30 now, UK time, so you can work out the time thing. But again, if you're not trading, or if you're trading New Zealand currency, and it comes into 3 a.m., you have to be aware of this, because I lost huge amount of money many years ago on the pound against the New Zealand dollar. Literally, I think it was over a rate decision, but spreads just widened out so much. We didn't have so much liquidity like we have now, but and I ended up getting, I think I lost about 5% on one trade when risking 0.5% normally, but the thing just gapped me 150 pips away. So do be aware of, certainly New Zealand, which is not one of the most liquid of currencies, of big gaps when you see the official rate come out. So just be aware of that. And then it often happens, we get lots of people complaining about it in the past, and so be aware of that, even if you're not trading it. 7 o'clock on Wednesday, we've got FOMC, stands for the Federal Open Market Committee. It's basically the interest rate. It's the Fed, basically. They decide on interest rates, and a couple of weeks after their rate decision, where they left rates unchanged, as you will recall, they have their minutes. And the reason why we look at the minutes is basically it gives us clues as to what they're thinking, and gives us clues as to where rates will possibly go in the future. I showed you before the SMC Market Watch, which basically gives us clues where the futures markets are expecting interest rates to go. So that sometimes has an effect on the FOMC minutes. I'm not going to show that to you today because we're a bit pushed for time, but that's certainly something you might want to take note of. On Thursday, we have got GDP, gross domestic product in the US, quarter on quarter, expected to come in at -0.3. How we define a recession, or how economists define recession, is basically if you have 2 successive quarters that are in negative, then that basically would constitute a recession. So keep an eye out for that. So we're expecting to see a negative quarter this quarter. Again, I think it's down to obviously what's happening with Trump and his tariffs and so forth. Bank of England governor speaking at 8 p.m. on Thursday night. Look for that, for clues. Central banks, when they get out there on the wires, it's called forward guidance. They basically pitch their sort of views on where they think rates will be going and so forth. I don't know where he's speaking or what the topic of his speech is, but the economists are all talking about Thursday, 8 o'clock, Governor Bailey speaking, for clues on where interest rates will go. I quite like sterling as well at the moment. Sterling is one of my favorite currencies this week. We'll look about that in a minute when I get on to the charts. Friday, we've got all-day German CPI. Different regions of Germany dish out their inflation numbers, and we're expecting to see inflation, as I said, dropping down to about 0.1% from 0.4%. Again, Lagarde maybe will speak about that this afternoon, about the inflation picture and so forth. You could see the euro come under a little bit of pressure this afternoon if indeed she does take that stance. So just keep an eye on that, although the dollar is still weak as well. Dollar's having a bit of a tick up in the last hour, I think. Yeah. Right, 1:30, we've got GDP in Canada coming in at up 0.2 from down 0.2. And we've got maybe the biggest event of the calendar week on Friday, 1:30 afternoon. That is the core PCE. Keep an eye on this one. I might be able to come on and do a live stream on this one on Friday, just to say hi, and we'll see if we can digest the numbers. So keep an eye on if you don't subscribe to the YouTube, subscribe now, and that's when you'll be notified, of course, if I schedule that, and of course you'll be notified when we go live. So make sure you subscribe to the channel now anyway, and that will keep you in the loop, as it were. So this is the biggest event of the calendar week, really. It's inflation. It's the central bank's main inflation number that the Fed look at. Most of the central banks look at CPI, but apparently the Fed like to look at PCE, personal consumption expenditure, more so. And that's expecting to show prices pretty much unchanged from last time out, up 0.1. And then we've got Australian retail sales out as well, and that's not expected to show much change. Ken Ather, FX. If you want to be included in your in the competition for next week's giveaway, then you need to have that put on the form that you'll see in the chat above, or it won't be counted. So scroll up, check the form out, and place your trade in your bet in there with your email, of course. Right, what's Sean saying before we start looking at the charts? All the experts saying the market hasn't found the bottom yet. Moody's downgrade the US. Yes, that's right. Downgraded the US last week. That's why a lot of the stocks were down. I didn't mention that, but yeah, good point. It's a lagging indicator, Moody's, isn't it? But nonetheless, it did have an effect on the markets. Markets are now rallying because of the rollback of Trump. Yep. Are retail about to get destroyed? I don't know. I'm having a fantastic year. Sitting there watching all my funds go up. Don't like to look at it really, but it's FTSE's up, everything's up. So yeah, I think when Trump announced his Liberation Day, stocks dropped about 20% over the next 2 or 3 days, and now we're higher than Liberation Day. So there you are. Right, okay. So that's the economic calendar for this week. Okay, so let's have a look then at a couple of things that I'm looking at. What am I looking at here? I'm going to look at, first I want to look at the German stock market. I think we'll look at the DAX. Let me know if you want me to look at anything in particular. Okay, and we'll do some analysis on here. This is the daily chart, the way I analyze the markets. Always look at the top-down view first to get my bias. I say I'm either following trend or I am looking for reversals. I never sell at all-time highs where there's no sort of price action to the left for me to mark my levels on. So at the moment on the daily, I can't see myself selling the DAX. Okay, what I can see myself doing is potentially buying the DAX. And one of the boomerang strategies. Let me just put up the 4-hour chart here. I mean, this is almost a classic. Look at this. I mean, again, I'm trying to get you to think, when you see candles like that, this double top from March 6th, March 18th is a massive level. You'll agree that, yeah? We had this sort of gap, through there back in the sort of first week of May. Broke up, come back to retest, put on these 3 sort of big momentum candles. Then we had this sell-off on Friday, straight into the previous double top, and off it goes. This is almost a classic boomerang trend following trade. Now, I didn't have this trade on, I must admit. I don't know what I was doing on Friday. Maybe I wasn't too active, but that is a level that you consider as a good buying opportunity. And now we've had that big momentum bearish candle, and this price action indecision slightly lower. Okay, you've got a double top there where we've rolled off it a couple of times at the moment. For me, I still think this is a buy. Okay, and I don't have any defined sort of entries to trigger off, but if you're using the boomerang, you would have to consider that level there, which is not far from here now anyway. So this high, which came in at 23,900, 23,900, pull back, broke through, back to retest. This has got to be your level to consider to the upside for entries. And stops, well, with risk on, general theme of the market, for me, you've got to have your stops down here. Now, if your stops are down here, you've got to have at least 1-to-1 profit target. So I would be, I'll be confident to place my stops down here. If you need to get more of a risk on, then you could possibly have the stops at 50% of this bearish candle, which would give you a better risk reward profile. Okay, if you go, say, getting your stops below there, so entries there, your stops below the 50% of that move for trend continuation high. It's not a classic boomerang by any means, right? So don't think this is a classic boomerang. It's not. But the DAX, for me, blue sky ahead, buying into dips would be my preferred choice. S&P 500, okay, S&P 500, big level. You'll agree this is pretty much the same as the DAX. This level that you saw when you saw the S&P 500 rally almost 5% into here, and then puts in this. This is basically liberation time. Remember, when Trump put all those tariffs on the world, that led to that sell-off. Okay, price has broken through that level now, as I said a moment ago. We're now higher than that level, and again, you put in that. You put in this, test of that with this high, low wicked candle, and then bullish momentum on the 4-hour chart. For me, I think stocks have another go with the S&P 500, another go at 5.9. This is just my personal views. I don't want you trading this, as I said at the beginning. We don't want you trading my personal opinions, but this is how I will analyze the market. I look for breaks of structure. I look for retests of structural breaks and look for entries. And I'll take the entry if I haven't got roadblock resistance or support if I'm selling ahead of it. Very simple strategy. Very simple strategy, which you can learn. Actually, you can learn much more about. Just I'm actually going to be doing a live webinar on Thursday, introducing some of our unseen data here at Funding Trading Plus. Unseen data of what successful traders are doing, what successful traders are looking at. So a lot of sort of secrets we're divulging on Thursday. And with that, I'm also going to show opportunities how you can learn more about the strategies that I've basically enhanced with this sort of prop data in mind. So we'll show you a link at the end of this stream how you can make sure you register for that live webinar, say on Thursday, with all this really powerful data, and also, of course, how you can get involved. But if you want to learn more about my strategies and get more involved in more sort of education and mentoring with myself here at Funded Trading Plus. So hopefully we'll see you there. What's that say? Why did the NAS buy gap and buy aggressively this morning? I think it was because of the rollback of the tariffs. Okay. Let's see if that's right. I think it's because of the tariffs. Let's have a look what the analysts are thinking. 2 days ago. No. That's what I think. I think the NAS just basically pulled better on the back of the tariffs with Trumpy boy. So that's what I would have thought. I will be number 1 to register. Good stuff. Look forward to seeing you there. I think my team, back office team, will pop a link in the chat at some point. If not, I'll do it later. Okay, well, let's analyze that again. So analyze the NAS 100. Can I tell you what I mean by roadblock resistance? You don't trade trend markets through these levels where there clearly or certainly could be liquidity. This is a double top in the NAS 100. Now, we're a bit of away from there at the moment. It's a zone. It's not just an exact level. It's the high of this zone, the high of this one. Okay. For me, we've got fresh air to there. So for me, the trend is still up. This is the daily chart. We've had a pullback. This here, from these levels, these green momentum candles, for me, is big money going in there. It's big money. It's not you or me on an MT4 or DX platform trading prop accounts. No, this is big money trading this higher. Okay, so when you see this type of move here, and the natural pullback, all markets have pullbacks. The natural pullback often is respected as a 50% pullback. So the 50% of this gap, I would say, from these highs back down to where it opened, would put in a level around here. This level here, I think, is also an important level. We bounced off there a whole bunch of times last time before we tested those highs I mentioned. Now, I know this is hindsight, and that's, sometimes it's difficult when you're trading hindsight because everything looks so easy, doesn't it, when you're looking back. But this level, this pullback level, had I sold here, where would I have bought it? I would have bought it here. Had my strategy triggered off a sell and I'd sold this level, which it didn't, but if it did and I was looking for profit targets, where would I have my first profit target? My first profit target would have been there. Basically where we bounced off it 1, 2, 3, 4, 5 times before. Okay, we shot through there. This big move, we shot through there with this momentum. This is liquidity buying here. This is institutional money, I think, buying here. This is an important zone. So for me, we've had this pullback. It found more liquidity. It found more buyers. Yeah, with this high wick candle, for me, there's more buyers in this market than there are sellers. For me, at the moment, the momentum is still with us. At this current time of writing, we're up 29%. What? Really? How did that go unnoticed? Okay, yeah. So this is the Liberation Day. That's why I'm making so much money on my funds. Not that I've been trading. I just sit and hold them. I've got quite a lot of exposure in these things. 29%, 30% we've had with the NAS going in this direction. Yeah. I think a retest of this, it would be, for me, the only trade I would take. In terms of entries now, well, for our entry, again, my naked setups. Let's see if I can get something on the 1 hour. My naked set, not naked, I beg your pardon. My boomerang trend following would see a pullback to this liquidity zone from here to there. So for me, if I was to trade this now, I would be sitting on my hands. You have got a bit of a level here on the 1 hour that it's struggling to get past. So I wouldn't buy it here as a fresh buy. But if I had to pull back here down to 21,100, then I think I can have stops below this swing low for a decent risk reward trade to the upside. So my upside would be up to that double top, and my stops would be, I would say, well, you can even have stops. I mean, you can get 1.5 to 1 by stops below there. But if you want to be a little bit more aggressive, you can have stops, below this low, 50% of this move here. Fibonacci is not 50%, by the way. Although some people think it's Fibonacci, it's not. That's where I'll be trading that. I'll be waiting for the pullback, and waiting for the pullback with that in mind as to hold. Be patient. It's the hardest trade in the book, being patient. I know a lot of you, get the excitement of when you're in a trade, something to look at all the time. It's exciting. I can tell you now, having done institutional trading for 30 years in the city, it wasn't very exciting at the end. What's exciting is going out on the weekend. But I know people find it exciting looking at the ebbs and flows of profit coming in and out of the account. Those traders are the ones that are more likely to be in an emotional sort of hamster wheel, if you like. You're never going to get away from that, and that's sometimes quite dangerous. But holding back, being disciplined, is one of the most important aspects of being a consistently profitable trader, in my opinion. So that would be my analysis of the NAS. Well, I just have a quick look at the Forex. Now, you've got 5 minutes to go before we close the doors on the Guess the Gold competition. Okay, so we'll just drop in the form one more time for you late comers. If we can drop in the code one more time, so it's in the current chat. Gold at the moment Yeah, so guess the goal by the end of the week. We'll just drop it in there. If you don't drop it in, it just scroll up and there you have it. Well, let's have a quick look then at the currency markets. You know what I look at. This is my momentum meter. I had this coded many years ago, as you know. Shows me what currencies are strong, which currencies are weak. And at the moment, as I said, we are on risk on. Stocks are up now. Yeah, stocks are looking good. NASDAQ is looking good. S&P is looking good. FTSE is looking good. DAX is looking good. This is risk on. Risk on. What does risk on do? It favors the Australian currency, the orange line. It favors the grey currency, which is the New Zealand dollar. It favors pound. It favors the purple currency here, which is the Canadian dollar. So these are the commodity currencies. These are the three main commodity currencies that we have in our basket of 8 currencies. Okay? And the weak currencies are the low yielding currencies. This is a classic case of risk on. The currencies that are being sold are the Japanese yen and the Swiss franc, the red and the red and brown, I guess, whatever it is, not brown. Yeah, the red and the off red. The red is Swiss franc. This one here is the Japanese yen. So these are under pressure at the moment. If you're trading currencies and you're trading trend, you want to trade the best opportunity, one that has the best edge. This doesn't predict the future. This doesn't predict the future, but it does tell me where the money is flowing at the moment. So at the moment, and this green line, I've colored mine green because of the greenback. It's dollar's having a bit of an update. Right, today it's just pulling back a little bit. The dollar getting a bit strong, but the dollar is inherently weak. So for me, I'm looking at the Aussie. I'm looking at the Aussie and I'm looking at the yen. You know? And then when I see risk on in the stocks, I see risk on in gold. Excuse me. I'll now have a look at the Aussie yen to see. It doesn't guarantee that it's going to continue, to see if there's a potential for it to move. Okay, well, there you are. I mean, again, I missed this boat today, but you might come back down into it. This is an uptrend. This currency pair on the 1 hour chart, we're up 1.5%. It's not going to look like much of an up, but it is an uptrend. Rolled off this double top on the daily. We start on the daily. Okay, so you got big level, big level, big level, big level, rolled off back to this previous level of support. And you see this bullish candle off there. What's that telling me? 2 days of bullishness. It's showing me that this potentially has room to put in another test at these zones. My stop is going to be below. I want to place my stop, but I don't think I'm going to get stopped out. I don't mind risking, don't choke off your trade with your stop too close. Cliche, I know, but so many to do it. But you're much better off if you just had that one trade for the week and have decent protective stops, 150 pips away, targeting there. You're getting almost a 2-to-1 risk reward with all the other fundamentals and technicals in your favor. That plays off. You're risking 0.5%. Well, then you've made your 1% for the week. If you're making 4% a month is what our target is, well, just take the high probability trades. 4% a month, you get your proper accounts in 2 months. You're trading a 200 grand account, you're making 4%. Well, that's 8 grand minus the split, of course, small split. Keeping it simple, don't be risking too much. Right, we got about 50 seconds before the end of this gold competition. Divanish says over 3,000. That ain't going to work as a terms of a guess. So yeah, like Aussie yen, everything works on the Aussie yen. Aussie dollar, I quite like the Aussie dollar. Look at this. This is an important zone here. This has been look at this momentum. I don't know if this is clear to you. So this, again, was Liberation Day. Right, this is the tariff day, and now we're higher. Stocks are higher than where Liberation Day was. Yeah, we've been bouncing off this zone a few times. with the momentum behind, you would expect this zone here to have been resistance. And even today's candle, with the dollar showing a bit of a bid, even today's candle is not showing a massive sell-off, is it? If this had a lot of liquidity up here, a lot of Aussies to sell, a lot of Aussie currency to sell, you'd have expected this to be way down here. It hasn't. It's holding these levels. That makes me think that the momentum is still going to continue with this currency. So I'm going to have my profit target up at the next liquidity zone, which clearly is up there at 66.66, the sign of the devil. So it must be is wrong. 6662, call it. No, it's 6666. Can't get away from it. You know, so you got your profit targets up at these zones. Again, if you want to learn more about the boomerang, make sure you join on for the webinar on Thursday. The webinar is not about the boomerang. The webinar is about the secrets under the hood of a prop firm. You know, we got thousands and thousands. I mean, I think it's. I think we've had 10 million trading hours, millions of trades. No, it's 100 million trading hours, 10 million trades that we've looked at over the last 4 years of prop data. So we know what the successful traders are doing. We see what the successful traders are doing. Yeah, and this webinar is going to be all about that. We're going to share with you the secrets of what the successful prop traders are doing. All right, so join me on the webinar on Thursday, and I think my team have just linked the webinar sign up form there, where you can learn a lot about what we do here as well. If you don't know, we're opening up a new education department here at Funded Trading Plus as well, to help the aspiring traders. Believe it or not, successful traders really help us. We want successful traders. So this is what we are trying to promote and get going, making people think differently. So Aussie dollar, like the Aussie dollar higher. Pound. I had a great run on pound dollar last week. Where is pound dollar? Pound is looking really strong. You can go long pound against the yen. You can go long pound against the Swiss. You can go long pound against the US dollar at the moment. This is a pound dollar smashing trade I had last week. Got in here somewhere down here. And this goes on. So where's my pullback? Well, that's the trend. I've got no roadblock resistance. Okay, remember, you don't want to be trading in front of roadblocks. I've got no roadblock resistance there. So I'm only buying, and now I look for the 4 hour for my entries, or the 1 hour for my entries. And where do you enter here? Well, there you go. Clear as day. Clear as day. Yep. This. Look at these candles. Momentum candles. High wick. Full of momentum. They call them Marubozu candles, where there's not much wick on them. It shows you momentum. Shows you complete control of the buyers. Yeah. They basically started over the week, last night, in obviously with the markets opening on currencies the night before, on Sunday, but it basically started there. For me, dollar weakness prevailing. The swing low that led to that swing high would be, well, you got one there. So a really tight one. Again, an aggressive entry would see a stop. Beg your pardon. An aggressive entry would see your stop below there with continuation up. No roadblock resistance. You can certainly get 2 to 1 out of this one for retest. But if you want to be conservative, trade for the week, then you can have your stops below 34.75 with still bias to the upside. Now, of course, at some point this trend will end. That's why you will use my boomerang reversal strategy for when it does end. But at the moment, I haven't got any real levels to sell off. because it's pretty much blue sky up there. Well done, TV. You registered. Well done for that. Good stuff. Get yourself registered. There is the registration details. If you want to get involved, chat is in the actual link is in the chat, so you can do that. Registered Werner, good to see you in there. I'm also giving away, and this is not, I mean, I'll tell you guys, but I'm also going to be giving away $150,000 worth of free assessments, $100,000 in one hit, and two $25,000. I think definitely 100,000. I can't remember if it's two 25s or yeah, it is $150,000. I'm giving away on Thursday as well, just for taking part. Completely random as well. No question, no quizzes or anything like that. Completely random. So your chance to win an account, and also your chance to get instant funding as well. Instant funding meaning you don't need to take the assessment or the challenge phase. You go straight into an instant funded account, which you can withdraw money on day one. So if you want to, I don't encourage you to do that, but you can if you want. I would rather you scale up. We're looking for decent long-term traders, but you're entitled to if you want. So I'm giving you an opportunity to take part in that as well. So there you have it. Right, well done, Werner. Good to see you registered. Nice to know, and my knowledge will be expanded. Yeah, I'm a bit biased, but I've been doing it for 35 years, Junior. I'm not one of these ones that have just, come onto the social media front and, started to talk about education because they failed in their own trading. I've been around for a long, long time. Wow, you're going to make people jam-packed on the webinar. Hopefully I offer value. That's what we're there for. I appreciate people's time, and we all get these invites for webinars. I get them all the time myself, but I intend to make it worth your while, the webinar, even if you don't come along the journey with us. The the knowledge that you'll learn from what we've seen of our pop traders is close that off, it's pretty interesting. Right, folks, I'll leave that there. Thanks for tuning in. Thanks, Kyle. Look forward to see you on Thursday. Thank you for that. So well done. Thanks for tuning in today. Remember, stay disciplined. Don't force trades. Don't be in trades just for the sake of it. It's bank holiday here in the UK today. Maybe go out and enjoy it. Well, it's not sunny, is it? But get out and do something else. There you have it. Junior, I've been talking about the giveaway all stream. Yeah, guess the price of gold, and you win it for the and winners will be announced next week. So there you are. Registered pink waving. Right, folks. Thanks for tuning in. Same time next week. If you're not going to join me on Thursday, as I say, I'm going to pencil in CPI, CPE, PCE on Friday as well. But I'll let you know about that. Make sure you subscribe to the channel here at YouTube so you're notified when we do. So there you go. All right, folks. Thanks indeed. Speak to you very, very soon. And have a good rest of the week. I'll keep this screen open for another couple of minutes or so. But as I say, the competition is now closed. But there you are. Thanks very much. Cheerio.